The Australian dream appears to be unraveling. For decades, young people were encouraged to purchase a house early and accumulate wealth over time, an approach that once propelled Australians to be among the richest populations in the world. Now, however, the housing market is in turmoil. The median price of a home soared from under $500,000 in 2011 to nearly $1 million in 2024, while wages trailed far behind. Despite being about the size of the contiguous United States, Australia has only 5 major cities, 2 of which, Sydney and Melbourne, account for 40% of the national population. Along with Adelaide, these cities are among the 10 least affordable worldwide, each requiring more than 10 times the average yearly income to buy a house. As a result, more people are turning to rentals, often lining up in large numbers just to attend property inspections. This surge in demand has further driven up rents, making homeownership feel more out of reach than ever. Many Western nations are experiencing housing stress, but Australia stands out for how frenzied its rental market has become. It's not unusual for prospective tenants to wait half an hour just to view an apartment. On Facebook Marketplace, one landlord in Queensland even listed single beds or shipping containers for around $200 per week, and another offered up a veranda. The situation is particularly striking because Australia used to excel in housing affordability, home ownership rates, and relatively low levels of concentrated disadvantage. During the 1950s, its economy was booming, and it boasted some of the world's highest living standards. This is when the idea of the Great Australian Dream gained traction. Owning a detached suburban house on a quarter-acre lot, complete with a garden and a Holden in the driveway. The new affordability of cars and a desire for space caused Australian cities to expand outward. Today, Melbourne's metropolitan footprint is 6 times larger than London's, despite having fewer residents. And Sydney sprawls across an area 14 times bigger than Berlin, but only has a couple million more people. Government initiatives like the First Homeowner Grant helped push the homeownership rate from around 52% in 1950 to a peak of 71% by 1968. Many other countries saw a similar jump, but Australia consistently led the pack. Underpinning this was the belief that owning a house naturally led to a better, more prosperous life, and for a while, policies kept housing within reach. Then everything changed. It's now a deeply political concern. With an election in 2025, politicians and commentators are offering a wide array of explanations in line with their respective agendas. But where did it go wrong? A significant turning point came in the 1980s, when housing stopped being treated primarily as a basic right and instead became viewed as a profitable investment. The government provided tax incentives for second home ownership, encouraging people to buy additional properties to rent out, increasing the number of investors, and pushing prices upward. Critics, especially those on the left, often pinpoint these policies as a major driver of the crisis. Still, it's one piece of a much larger puzzle. Over the past decade, interest rates plummeted in an effort to foster economic growth and keep inflation under control, going nearly to zero during the pandemic, as happened in many places. These ultra-low rates made home loans more accessible and further stoked demand, which in turn drove up prices. On top of that, billions of dollars were spent on helping middle and lower income families enter the housing market. While this did assist many people, it also fueled higher demand, adding more heat to the market. Under normal circumstances, new home construction could have offset this, but supply simply didn't keep pace. One reason is the dwindling production of public housing. The number of government-backed units built annually for people with lower incomes plunged from 20,000 in 1978 to a mere 3,000 by 2023. These public units helped prevent homelessness and were needed more than ever, yet the funding declined. Meanwhile, the private sector faced mountains of red tape. Plus, most people want to live closer to city centers for job prospects, education, and infrastructure, but local opposition often stifles higher density projects. "Not in our backyard" continues to echo in many neighborhoods. Add in supply chain disruptions and labor shortages, and you have a recipe for insufficient housing stock and soaring prices. While all this was unfolding, Australia admitted a record number of immigrants in the last 2 years. Its population growth is driven almost entirely by newcomers, which dipped to 25,000 during the pandemic, but then spiked to an all-time high by late 2023. Critics argue that such an influx was poorly timed, considering that construction costs were up by 40% compared to before the pandemic, and project completion times had increased by about 18%. This meant that even more demand collided with a supply shortage, further raising prices. Immigration can address certain labor gaps, but it also piles additional pressure on an already strained housing market. By 2024, the issue dominated public debate. The surge in immigration coincided with 5 consecutive quarters of shrinking GDP per capita, the longest drop in Australia's history, and a record spike in rents. It's part of a broader trend. Adjusted for inflation, average house prices in Australia's main cities have more than quadrupled since 1971. Although rising home prices affect many parts of the world, Australia's climb has been especially steep. In 1987, the cost of an Australian home was about 2.8 times the average annual wage, roughly on par with other Western countries. By 2019, that figure had reached nearly 7 times, outstripping the United States, Canada, and the UK. In 2023, it soared to 9.7 times, second only to Hong Kong. The long-standing idea of purchasing a house and gradually building up wealth has become out of reach for many. A full-time worker on minimum wage now allocates about 68% of their income to rent, leaving little chance to save for a down payment. This dynamic pushes more people into lifelong renting, while property owners amass growing fortunes. There's rising concern about a two-tier society with wealthy homeowners on one side and struggling renters on the other. Looking ahead to 2025, Prime Minister Albanese has pledged to focus on supply-side solutions. In 2024, he introduced a $32 billion initiative aiming to build 1.2 million homes over the next 5 years. Skeptics question whether it's enough, noting that interest rates are returning to 2011 levels, which could dampen demand by making mortgages more expensive. Discussions on tax breaks and immigration are also back in the spotlight. Ultimately, it boils down to balancing supply and demand by limiting immigration, loosening planning restrictions, or both. Each approach comes with pros and cons. Politicians now face the challenge of convincing voters they can fix, or at least improve, this crisis. Meanwhile, a majority of economists tend to support easing zoning rules, expanding public housing, scaling back tax perks that encourage investment-driven property purchases, and revisiting how states levy housing-related taxes. Share your thoughts in the comments and be part of this important discussion. Don't forget to like the video and subscribe to my channel. See you in the next video.